Hi, everyone. Welcome to the final week of Unit Masters Cohort 7. This is an exciting week because we're going to be talking about the Unit network and the platform developments and really the vision of Unit. We've got with us our very own Michael Healy, who is CTO and co-founder of Unit Ventures, who's going to talk about the future economy right now and also share with us some developments on the technology behind Unit. We're super excited to hear what Michael has to say. Please, if you do have questions about the token economy and what that means, anything to do with what Michael's talking about, just drop it in the chat and we'll cover it towards the end. All right, Michael, the floor is yours.
Thanks so much, Anne. Really appreciative and grateful to be here. Really enjoyed the past master's program batch, and really excited to listen, discuss, and learn from all the different questions here today. So if you have any thoughts, ideas, feedback, questions on the Unit network, the token economy, the digital assets space, please feel free to write it in the chat, or you can raise your hand and we'll call upon you. So. Thanks so much, Anne, for kindly introducing. Maybe you can also start off by giving a quick introduction. So I guess what is Unit? What is the Unit network? So Unit is based on this idea, this vision of the token economy. The idea that tokens are as integral for the economy as the way the internet is used on a day-to-day, the way the mobile phone, people can't live without it. At the moment, tokens, cryptocurrencies, digital assets, they're kind of treated as a speculative trading tool, kind of like a casino. People are buying into coins or tokens, like lots of groups, and it doesn't really serve the real world, or doesn't have much use for a lot of people, and a lot of people completely write it off. And we're excited because we recognize the potential behind tokens and what they can do for people, projects, for a future world where everyone really thrives and benefits. And if someone asks you, what is the token economy? Why is it so important? How is it going to change the world? One nice idea to think about is the fact that if you look at how wealth is distributed at the moment, most of the money is held by the people who start things, the founders, and the people who invest in the founders, the investors. The other side, the customers and employees, they don't receive any of the vast amount of value created. So if you look at something like Uber or Airbnb, it was started by a small group of super smart people, and some investors like Sequoia, Andreessen Horowitz, like investors with lots of money, gave them some money. And then when Uber became worth $80 billion in 2012, all of these people became exceptionally rich, but none of the people, the drivers, the customers, the 2 million drivers, the millions of riders, they didn't receive any of the upside that was created by the value creation. So, in the future token economy, these tokens, allow for value and for ownership to be distributed much more equitably. And people might say, hey, isn't that communist? Isn't that socialist? Like, the founders, they had these brilliant ideas. The investors, they should really be receiving the money. The customers, the employees, they just benefited from it. So the cool thing about the token economy, you don't really need to choose either or. You don't have to go like, hey, I'm a taxi driver, I should be getting this. Uber driver, I should be getting the same as Travis or Garrett Camp, who started it, because without me as the driver, this wouldn't be successful. It does include, the drivers, the customers, the community, but it basically creates a bigger pie. So, instead of all of the pie being held by the founders and investors and the customers and employees getting nothing, the pie is just getting much bigger. The founders and investors, they benefit because they get, more pie, but at least some of the pie is shared by the customers and employees. So I guess that was a quick input of the token economy and how, every single project in the world, whether it's, an office space like the one I'm in, or, your favorite musician or artist, or, your, the restaurants that you visit, the gym that you go to, the spa that you frequent, the hotels that you've stayed at in the past, you're going to have the opportunity to have, a piece of the value created. Or if you think, I've worked on so many projects or companies or supported people in the past, you would have tiny pieces of all of those people, projects, and company tokens, and it basically keeps your incentives aligned and have a vested stake in their future success. Yeah. Cool. Great question here from Ivy. Curious as to what the state of regulations are for creating a token that is meant to be used as a form of payment, and at what point does a token become a security? So this is a great question. So there's two parts to it. The first part is regulations. What is the regulation? Second part is payments, and the third part is tokens and security. So I guess the state of regulations in the world, it's a huge super gray area, very unclear. People don't really understand it. The regulators, the governments don't know how to approach it. It's so new, it's so different. One way to look at it is, the regulators are really just trying to protect people. They're trying to protect the people that are lobbying them, and they're also trying to protect the everyday person not to get scammed. So they're needing to navigate on this space delicately. They don't want to completely outright ban, cryptocurrencies, digital assets, because a lot of the founders, the funds will just move elsewhere. So like the US initially took a very strong regulatory stance. And then, the way in which they're navigating is such that, hey, the US is the capital for technology in the old internet world and the mobile world. And if they completely ban this new exciting technology, they might just get left behind. All the amazing entrepreneurs might move to Asia, they might move to Europe, they might move to South America or Africa, and then they don't receive on the upside. So they don't want to disregard it completely. They want to be in the game. I highly recommend listening to Gary Gensler. So he's the chairman of the SEC, the Security Exchange Commission, and he gave a very good course at MIT, and it's a lot of the ideas and the inspiration behind our unit masters program has been from this program. I'll post a link in the chat, and it's quite extensive. It's super long. It's 23 sessions, but it really does a good job in explaining extremely complex and technical concepts in a relatively simple way. So he's now in charge of deciding what is a security and what isn't a security in the US. He's the chairman of the SEC, and it's great because he at least understands the technology, because a lot of people try and regulate or create rules and they've never played the game. So imagine if you're like to introduce some new rules for like a chessboard or Monopoly game, and you've never actually played the game. It's very difficult. So if you listen to, like the Facebook deposition or the Facebook hearing, Mark Zuckerberg at Congress, a lot of the senators had no idea what WhatsApp was, or email, or the internet. So to be able to police or create rules when you don't understand it, it's really difficult. So the cool thing about Gary Gensler, who I posted the link with, he really understands the technology, and I think he does want the long-term best for the ecosystem. A lot of people say he's crazy, he's trying to kill the whole industry. I personally believe that he does mean well. He does care a lot about the technology, and he just doesn't want people getting scammed, because there are a lot of cryptocurrency digital asset projects which have no product. They promise the world. They've got no economic sustainability, in the sense that they are just trying to bring in more capital and use this capital to pay out older investors. So that is a very classical Ponzi scheme. A lot of the staking stuff that doesn't have underlying real value created. So when you create value, it has to come from somewhere. So I think he really does mean the best here. And question here: at what point does a token become a security? So how he talks about it, he uses this thing called the duck test, and the duck test is based on the idea that if it looks like a duck and it walks like a duck, it's a duck. So that's the duck test, and it's very different to, like, say, the Howey test. So the Howey test is a set of 3 rules. I can post a link to the Howey test, and the Howey test basically says that it's a security if it meets 3 different questions. So 4 different things, 4 criteria. So the first one is an investment of money. So money basically goes into it. The second one is it's in a common enterprise. So there's a group of people, a small group, like a company has a group of people who are working on it. So it's not decentralized, it's a centralized group of people. The third one is an expectation of profit. So you're putting money in because you expect money out, and the fourth one is it's to be derived from the efforts of others. So you're basically putting money in, you don't have to do anything, but you're making money from it. So those are the 4 pieces of the Howey test. And a lot of digital assets, cryptocurrency, blockchain projects look at the Howey test and they say, we're not a security because of these 4 rules don't apply to us. But then Gary Gensler says, he doesn't want to create regulation based on the Howey test. He wants to do it based on the duck test. So that's I guess, an interesting way to determine what becomes security. And really interesting hearing at the Congress last week, or no, the Senate, I think. It was the 4 biggest cryptocurrency exchanges and their major founders, the head of the Stellar Lumen Foundation, the head of FTX, the head of legal at Coinbase. And one of the things which which Sam, who's the founder of FTX, says is that being a security shouldn't be something that people are scared of. A security is actually something which has value. So if I made a micro token and I'm like, guys, your micro token is not backed by anything, you're not going to get any profit, it's not security, you're just doing it because you want to buy some micro tokens or support me, that's not a security. But you don't want to be buying that because what is the underlying value there? You really want to be buying, let's say, a micro token because I had a plan, or I've got progress, I've got traction of let's say I was a professional musician, I was doing well, on touring gigs, I was, selling all merchandise, and you're like, Michael, if I bought some of your tokens, I'm going to have a vested stake in helping you sell more merchandise. So that's how you can align incentives. But very important that when this happens, people don't lose money, the expectations are set. It's very clear, because if you don't set the expectations right, people will get disappointed, they're going to lose money, and really that's extremely dangerous, because the way the world works at the moment is there are a lot of people who would take advantage if given the opportunity, and a lot of people who if you look at Wall Street, look at 2008, made a ridiculous amount of money and there were no repercussions. If you look how few people got persecuted or got in trouble from 2008, despite countless lives being ruined, it could be commonplace if things like the treasury that Unit provides isn't set, because there isn't a way of telling whether a token is sound. Question here from Kritika. Is one of the value propositions of a token to be a medium of exchange? In future, can I use it to buy groceries and also use the same token to buy an airline ticket? So this is a great question, about medium of exchange, and Ivy talked about it above, about can it be used as a form of payment? So, people like to distinguish between mediums of exchange and store of value, being able to use a token because it's meant for paying, and another one because it's meant to store value. The way I like to look at it is that in the future, in the token economy this decade, when there's countless millions, hundreds of millions, billions of tokens, trillions of tokens, it's not going to matter whether a token is a medium of exchange, because everything will be a medium of exchange. So I imagine if you could use your personal token to pay the groceries, the groceries doesn't want your personal token. They want Bitcoin, they want Ethereum, they want digital US dollars, digital euros. But if you use your personal token to buy some groceries, what's happening behind the scenes? The same way if you had a European bank account and you shopped in Vietnam or in Thailand or in South Africa, you might not have any South African rand or Vietnamese dong or Japanese yen, but when you pay your card, behind the scenes there's a lot of conversions. Your euros are being used to, say, buy US dollars, your US dollars are being used to buy yen or used to buy South African rand. So the same way, if you use your personal token to buy some groceries, your personal tokens might be sold for, say, Bitcoin or sold for US dollars, and those US dollars are used to buy those tokens. So it's all going to become seamless and super easy and flexible to use. Question Ivy, and when it's used as a form of exchange, is it a security? So this is a good question. It doesn't really matter. So I guess by the book, what is the security is those 4 rules. And of the Howey test, and then according to the duck test, if it sounds like a security, then that's a security. The fact that it's used for a payment or not, doesn't really have an effect on whether it's a security. Great point here by Lawrence. There is an app called Travala, and it's one that works very closely with Binance. It basically allows you to buy flights, hotels, things in the travel industry. And what's happening is behind the scenes, they're buying cash for. Question here, how do you set up the first value of your token? Can you actually have a token that is security, utility, and governance? Exactly. So this is precisely what Unit powers. So, it's the easiest way to create a token. You basically give it a name, you give it a supply, and you give it a symbol. And I can share my screen here to show you what that looks like. It's completely seamless. So this is, the Unit network. You basically give it a name, you give it an image, you give it a supply, and you give it a symbol. And that easily allows you to create a token. And then once you create a token, there are a bunch of features that Unit provides you to benefit from having created a token. You could create some sale stages on the sale round, and that basically allows you to sell some of your tokens for some capital to do something with, or you could create a poll so that your community members can partake in some decision making. You can create a store so that people in your network or your community can start exchanging for goods or services. So yeah, really countless number of features that unit provides. Yep. So question from Paula. We can create tokens. Absolutely. So all of the hard work that we've done in our conferences and our ventures program and our masters, our university, and our news is all centered on this piece of technology, the unit network. And I can show you. So this is, for instance, the village token that we're building. It represents, the unit village that we're building here in Bali, and all are welcome to come visit. Under the info page, you've got things like questions. You can ask questions to the project. You can create a poll, so you can do some decision making, some governance. You can see who's in the team. You can see who the advisors are. You can search. You can hit meet. You can go into community, and you've got all of these features. Things like you can give away some of your tokens in a contest for performing an action. You can create a store for buying and selling products and services. You can organize events. So like we're an example of an event now in our master's program. You can create a group so that people within that community, people who hold that token, can meet up, they can gather, they can communicate, they can organize stuff. You got papers. So papers are like Wikipedia. You can collectively work together to write some material or to update like an encyclopedia around a particular topic. News, this is similar to Reddit. So you can think of papers as like Wikipedia. You can think of news as like Reddit. And then here, the different features, banks, treasury sale. So I can show you as an example in the unit token. So if I had to explore the unit token, you can see all of the different leaderboard team here. For instance, in our bank, we have $5.098 million in our unit bank. We will move all of these funds across to the treasury, and that will create a floor price for the unit token. And people can buy and sell the unit token on the exchange. So it's really quite exciting, the opportunity to participate in the token economy and how easily and seamless we make it. Point here from Ming. You guys are adding so much value at Unit Masters conferences. Can you tell us about the bigger picture and what you're trying to achieve? So this is a great question. What are we doing and why are we doing it? So really going back to what we first discussed, the token economy is the core of what we do and why we do it. So, there is this gap in wealth and equity in the world. And we think that, the token economy is going to help to bridge that. The same way, 15 years ago, before the iPhone came out, not many people had smartphones, And Apple released $1,000 iPhone. Everyone was like, "This is crazy. Nobody's going to pay $1,000 for a phone. A phone costs $100." And now the phone that you get for $20 in rural China or Indonesia or Africa or Indonesia or South America is more powerful than the first iPhone. And it's costing $20 or $50 or $10. So it just shows how communication was revolutionized and changed so much thanks to the smartphone. Same with the internet. Access to information, access to education wasn't really prevalent. And then, in the course of the 90s with the dot-com bubble, and then in the 2000s with YouTube launched in 2005, Facebook launched in 2004. The internet's really transformed access to information, mobile transformed communication. Now, money and value is something that isn't as democratized as it should be. It stresses a lot of people out. We're super confident that this decade, so in 2021, we think by 2025. Cutting edge innovators like ourselves on the call will start using tokens, creating tokens, trading tokens, supporting people with tokens. And then by 2030, the long tail, everyone in the world will hold different tokens, partake in the token economy. So I guess that is a big trend. And then when we solve the inequity, everyone's got a good base of economic value, then people can start thinking about things which are more important, whether it's the environment, whether it's, racial equity, gender equity, things that if they didn't have to worry about money, that's what they would be doing. They'll start creating, art, they'll be doing, dance, they'll be doing theater, things that, might not make a lot of money at the moment, but it has a lot of value to society. Great point from Paula. Oh my God, I didn't know any of this. So really excited, we our co-founders on the call, Yip, Han, Roland, Joe, like all of us have been working super hard on building this. Adrian, and Myra. We're really excited to see how we can support the many things that people are working on and how we can help make those things a success. And there's a question here: what is the incentive for co-founders, brands, or business owners to choose a cooperative ownership model? And what are the pros and cons of the governance aspect associated with creating a token economy? Can you put rules on the rights token holders have? So this is a great point. So, if you're a co-founder of a brand, or, you're a business owner, you're a community builder, why should you use this cooperative ownership model? So the key reasons, one, is that it will increase your chance of succeeding. At the moment, people like to say 90% of businesses fail, and the reason why they fail is, co-founders disagree, it runs out of capital, the timing isn't right. And the cool thing about tokens, it reduces the chance of any of these happening. Through the use of tokens, people might argue less because it's less centralized. When you create a project and it uses tokens, it becomes more decentralized. You can set what the high level goals are, and then people can collectively work together or not together towards those common goals. Also, you've got the community who are going to increase their chance of you succeeding. And, if you need to sell more product, you need to market, you need to grow your organization, you need to sell, all of these token holders are going to help you get those goals. Within Unit, we have a methodology called MOPS, M-O-P-S, and it stands for marketing, organization, product, and sales. So all of us in our team, we kind of lead and participate in one of these MOPS, marketing, organization, product, and sales, and allow for the continual growth of the overall ecosystem. A question here also, can you put rules on the rights token holders have? Absolutely. So, the cool thing about tokens is that they're permissionless. You can really choose, what tokens give you access to. You can choose, what, let's say we talk about payments earlier, what these tokens represent. So if you have a restaurant, you can say X number of tokens buys you this amount of goods. You could say if you have this amount of tokens, you get VIP access to my concert. So it's really up to you to be creative and decide what the tokens can be used for, what they represent, and hopefully it has a underlying economic model that the treasury grows, so that it's not just depending on newer investors to pay off the underlying value of the token. A question here from Paula: what blockchain is Unit using for this? So we've built the Unit network, which is our own layer 1 blockchain, and the Unit network is built on this thing called Polkadot. So you can think of Bitcoin as being one of the first blockchains that came out 12 years ago, basically focused on payments and focused on storing value. Vitalik wanted to create upgrades or do more with Bitcoin, but then he unfortunately wasn't allowed to do that. The core developers said, nope, we're very focused on this, we don't want to do anything else. So he, in 2014, created Ethereum, and Ethereum was focused on smart contracts. So it's kind of like, hey, a blockchain for payments is cool, but what if I wanted to build a blockchain for social networking or a blockchain for a marketplace like Uber? So he created Ethereum with a bunch of talented people, and then one of those talented people was Gavin Wood. So Gavin Wood was the CTO. He wrote the yellow paper. Vitalik wrote the white paper. The white paper gives the conceptual idea, the thoughts of it. The yellow paper talks about the technical details of, okay, this is a great idea, but how are we actually going to implement it? So Gavin Wood wrote the yellow paper, and what he realized early on is that Ethereum with its current implementation and past implementation won't scale. A lot of it won't scale. The governance hadn't been thought through. The application of it to the real world wasn't extremely. Not a bunch of time was spent in. So Ethereum was built by 2 engineers in a few weeks. So it's a very simple, not a relatively simple global computer. The fact that everything can build on it. So Polkadot basically says, hey, Ethereum's cool, but instead of trying to do everything on this one chain, let's build a blockchain for X. Let's build a blockchain for, in our case with Unit, the token economy. Let's build a blockchain for logistics or the supply chain industry. So Unit is using this thing called Polkadot or Substrate, which lets you build your own blockchains. And we're a blockchain focused on the token economy. Anchor here, create an economy of anarchy, basically an economy of rules without rulers. Absolutely. So really empowering people to experiment, create, and support each other, thrive, and do so in a way where it's not zero sum. It's cooperative, collaborative, and really allows everyone to succeed and thrive. Great point here from Yep, everyone can be a part of Unit Network, join conferences, be a pioneer, work your way towards being a core team member, building the token economy of tomorrow. You can speak to any co-founder in the room, Michael and Brett, myself, if you want to become a contributor to the Unit Network. We have CVMUN, so conferences, ventures, masters, university, and news. And we're always looking for help. Myra, Brett, and Joe, we're here too. So Myra shared some of the social links, so please feel free to connect with us, or if you have any questions, thoughts, feedback, or advice that we can learn from, we would be very appreciative. Pauline made a big shout out towards Polkadot. So I'm also a big fan, and we're actually very close with the Web3 Foundation. One of the actually the lead developer, his name is Marek, Polish friend. He was the lead developer of Polkadot, and we're also very close with the rest of the team. We actually organized a camp for Africa Burn with the founding team for Polkadot, which was really fun. And we're excited to team up and support them in the future, as well as having their support, which we really appreciate. Lawrence, here's the point: if you are selling a token for fiat currency, would that run the risk of being classed as security? So this is a good question. If you sell a token for fiat, is it a security? A lot of things sell for fiat. If you think about a microphone, you think about a phone, it sells for fiat, it sells for cash. But it's not a security, even though a brand might say, hey, if you buy these shoes, it's a good investment. How a security or an investment is typically determined is by the Howey test that was shared above, the four questions, and the duck test. So there hasn't really been much clarity with regards to what is a security and what isn't a security. One thing that I really enjoyed in the hearing at the Senate last week was if people talked about the internet, of the dangers of what it can do to fake news, to identity fraud, to internet scams, we wouldn't be having this conversation, because the internet would have never had the chance to make mistakes and thrive. So really appreciate that the regulators do realize that this industry has a lot of potential, but it's also super young. So you don't want to completely write it off. And the other cool thing is that if you do try and kill this industry, it's just going to move elsewhere, because a lot of the people, my co-founders on the call, all of us here in the master's program, we're so inspired by what this technology can do. Even if regulation was to come in, we would move to a place which support this technology to thrive. So I'm super optimistic and positive there. And I think even if governments came down harshly on it, I think it would just maybe force it to take a bit longer. But there is no doubt that this token economy will thrive and will become an integral piece of the future world economy. Ivy says, I love this, but so far I've only seen rewarding tokens for actions taken, say driving an Uber, offering a home, watching a video. What do you think will happen to the data ecosystem? Do you think the ethos of Web3 will allow people to trade their data for token rewards? I'm exploring the space. So it's a great move, Ivy. I highly recommend, diving really deep into exploring the space, creating things in the space, because, if this was, a marathon, 42 kilometers, we haven't passed the first 100 meters yet, in terms of the future of what's creating. If you think about the internet, now we're in 2021, where you can use the internet to have an amazing call like this. YouTube only started in 2005. Facebook launched in 2004. Amazon started in the early 1990s, 1995. eBay in 1994 or 1993. We're probably in the 1980s now. So if you're talking about YouTube, you still have 20 years to go. You've got the 90s to go through, and you've got the early 2000s. So in terms of what's possible, like I remember Bitcoin being at $10 and $100, and someone said, someday Bitcoin will go to $1,000, and I was like, nah, it's impossible. Like if that was the case, everyone would be buying a lot more Bitcoin now. If it will go to $1,000, and it's just very hard to see it in hindsight. Like I'm super confident that Bitcoin will go to $50 million. It will go to $1 million first, by 2025, and then it'll go to $50 million. But it's very hard to kind of experience that, to think that, Bitcoin could be at 40 something thousand or 60 something thousand. And it's not going to matter if it drops to 20 something thousand or 10,000, because it's going to $1 million, right? So it's quite difficult to kind of see how the dots connect looking forward. But then you look back and you're like, oh, it's so obvious that it went from 1,000 to 10,000 to 15, and when it went to 19,000, even though it dropped to 3,000, like now we're at 50, people treat it as super normal. So I guess that talks about the price and talks about Bitcoin, but this is talking about the whole world. So if you talked about, say, driving an Uber, offering a home, watching a video, tokens will be an integral piece of everything. So like now we're using an American company's video conferencing application. this company is worth, tens of billions of dollars. Without people like us, it wouldn't be worth anything. So, if tokens were as, mainstream as the internet was, every minute we're watching videos, we're partaking in the value of it. Someone paid for the Zoom call. All of the people who participate in the Zoom call should be receiving some tokens for that, because they are participating in the value creation. So at the moment, it's still kind of abstract, it's still kind of new. But in the future, every action you did, it would just reward you if you're contributing to the overall value creation. Message here from Kritka. That's a very good question. I totally agree. Lawrence has the point here. You mentioned about having tokens for entry to perks. Do you know how NFTs would be different? If I join a community that launched 5 different projects, NFT projects, we were airdropped NFTs which serve as governance tokens. I believe it was done this way to avoid being classed as security, as not a token can be sold, rather than NFT being minted. Any thoughts on that? So great question. What's the difference between an NFT and a token, like a fungible token? So tokens, are really not new. So started off with Namecoin, Bitcoin. Bitcoin was one of the first cryptocurrencies or tokens, and then after Bitcoin, people started creating name coins. If you look at coin market cap in 2012, and you look at the leaderboard of the biggest tokens, you might recognize a few of them. One of the ideas was colored coins. The idea is that you can create a coin for something, and then where it became really hot was in 2017, where people launched ICOs. They created their own coins, and then that quickly died off. In 2018, I was at a hackathon in Denver, January, and the NFT standard had just come out. So there was a project called CryptoPunks in 2017, and people were like, wow, this is really cool. The idea that you can create a digital asset and people can start trading this digital asset. So there was ERC and Ethereum requests for contributors, and they basically introduced ERC 721, which is like the NFT standard, and I got to meet the founders of OpenSea, and back then it was they were like saying, hey, this NFT thing's really cool. We're gonna build a way for people to trade the NFTs, and NFTs had just been launched a few weeks then, and I was like, wow, I just come from Guatemala. I was very passionate about issuing tokens for trees. I was like, wow, isn't it cool that there's carbon credits, but it's completely illiquid. Wouldn't it be cool if we created tokens for trees? And I was very interested. I said very openly, I believe fungible tokens are much more interesting. And Alex, the CTO, said, hey, just create an NFT. It's very similar to a fungible token. The key difference is that, as you mentioned, it can't be classed as security, and you can set very specific properties for each token. And I guess my personal stance then, and I still feel the same now, is the tricky thing about tokens is it's very hard to tie a real world thing, like a real world property, microphone or headphones, to a digital token. It's very hard. The same way to tie a website to a company is very challenging and difficult. So the only way you can do that, especially when it's decentralized, is through the use of a treasury, like in case of Unit, and what we've seen witness happen with NFTs, this NFT craze this year, the word of the year was NFT, is that people have made NFTs fungible. So the point of a non-fungible token is that you only have one of it. You don't really have tradability of it. But what we've seen emerge is that if you look at for instance, the Bored Ape Yacht Club, one of the big NFTs, there is a very liquid market for it. The perspective, though, is that the cool thing about tokens or fungible tokens is you get tradability of it. The issue with NFTs, for instance, I have a lot of friends who do a lot of wash trading of NFTs, and what they do is they'll go into an NFT project, they'll start buying it from themselves. They're okay paying the fee that OpenSea charges, but at least they push up the price of the NFT. A lot of people are like, wow, my NFTs are worth a lot, and then they start dumping it. So the cool thing about, for instance, the treasury we spoke about earlier is it solves for that. And going back to Lawrence's question about using tokens or NFTs for that, we think that it's going to become commoditized. It's not going to really matter whether it's fungible or non-fungible, because people really just want some value behind the token they're buying, and they want it to be very clear, if they bought this token, what is the worst case scenario of what the token's worth, and they want to, the level of expectations that they're entering into buying the tokens. Paul has a point here for Ivy. Have you ever looked at Hive? It still rewards via actions, but unlike an Uber that just rewards drivers, it rewards creators and consumers using likes and upvotes. Cool. And Lawrence mentions another project, Odyssey, which is doing similar. Paul is reaching out to all us connect, so please feel free to post your LinkedIn links here if you want to connect with others. Darry Larimer to envision the decentralized society. There's no centralized governments. Will there be a destabilization of nation states? This is a great point by Ali. So Daniel Larimer was actually the founder of BitShares. It's one really cool digital asset project. And then he left it to launch a Steemit, which was like a decentralized version of Reddit. And then more recently, he launched EOS, which was the biggest cryptocurrency ICO in 2017. They raised $1.8 billion over a period of a year. And recently, I think he's been ousted, which is really sad. And it's, it's a shame that, EOS raised $4.1 billion and they weren't able to do a lot with this vast amount of funds. Yip posted a link to the Unit World Munich Forum tomorrow. So I look forward to everyone participating in the World Unit Forum. We host a bunch of these conferences for different cities and industries. We're grateful to have Yip here, one of our co-founders who's leading this, and the speakers look incredible. So I'm really looking forward to listening and asking questions and participating. Lawrence here, if anyone is keen for collaborations on panel discussions about crypto, blockchains, I'm hosting rooms on Clubhouse for Beginners. That's awesome. And also, if you're a speaker and want to participate in one of our unit conferences, very similar to the Clubhouse format, Roland posted a link to our Unit Global Telegram chat. He mentioned here, we will hear presentations from Unit Ventures team presenting our 10-week Unit Ventures Launchpad. So our Unit Ventures Launchpad starts in January, and we're really excited to hear, some of the projects that we'll be participating and seeing how we can support that. Ivy says, do you know what kind of data a company knows about their token holders right now? So at the moment, there aren't very many tools for tokens to succeed. So a lot of token-based projects, they like to boast about having, hundreds of thousands of holders or tens of thousands or hundreds of holders, and all they see is, a crypto address. It's very hard to know who these holders are, where they're based, how they can partake in and learn from their community. So the cool thing about Unit is, we support a lot of the features and participation of the community, because, very similar to when the internet came out. I remember building websites in the early 2000s, and I was amazed that there were no website builders. At that point, Squarespace hadn't launched. The biggest ones was webs.com. And I was like, wow, these website builders are so terrible. There should be a way to have people build websites. So one of my first web applications was an article writer and a website builder. And we're at that same point in with the token economy and cryptocurrencies where people are like, hey, I want to create a token, but how do I do it? And then they create a token, and there's so much complexity going on. The process by which to buy a token is extremely complex. Somebody loses their keys, it's like, oh my gosh, like it shouldn't be this unintuitive. So Unit, and we think other things like Unit will be thriving in the future, where it basically makes it seamless and easy to create tokens, and not just to create it, but allow them to be sustainable and allow them to thrive. So really give the tools. Christopher, why do you think Bitcoin can go to 1 million? It is backed by utility use. Is it not more likely that Unit token will get to 1 million given it has utility use? This is a great point, Christopher. So we are pretty confident. We will overtake Bitcoin. We think it's just a matter of time. But the cool role that Bitcoin serves is as a reserve asset. So without Bitcoin, Unit wouldn't be able to put stuff in our treasury, because imagine you're trying to build a building and the foundation you built on wasn't very good. So you need to find a foundation. So without Bitcoin, the world wouldn't have understood about decentralized peer-to-peer payments and store of value. Without Ethereum, a lot of people wouldn't have experienced what ICOs existed, and the idea of issuing tokens and fundraising as well as distributing value. Without something like Polkadot, Unit wouldn't be able to build a blockchain as seamlessly and a reliable piece of infrastructure to build on. And without Unit, people wouldn't be able to easily create tokens without having to worry about all of the stuff that happens underneath. So I just think, this industry is, single-digit trillions of dollars at the moment. Pretty confident that it will go to, hundreds of trillions and then go to thousands of trillions. We're just really, it's in its infancy. And if you think about how few, big name investors or, serious business people are thinking about building, sustainable token-based projects now. I used to work at a fund in London. Wellington Partners, one of the biggest in Europe. And, many of my colleagues and friends, people that we worked with, they kind of disregard the token space. They think, that it's too late, they missed the party. They don't want it to succeed because they don't hold any crypto. But what they don't realize, and what they will realize soon in the future, is that it's really such early days. Even in 5 years' time, the token economy is still going to be very young and nascent. Even in 10 years' time, this is going to be so much opportunity. And really, when the token economy what would have served its goal is, when people stop thinking about the monetary value-based aspect. It's kind of like, you go to a restaurant now, you don't order 25 plates of food thinking that there's going to be a famine. You kind of like, there's more enough food to go around, or oxygen. There is so much air around. You don't kind of think, there's a scarcity of it. So at the moment, even some of the richest, most powerful people in the world, they think about, money and the scarcity of it. But the really cool thing that the token economy will bring us towards is where it just flows around much more freely. People are given much more opportunities to create, to experiment, to thrive. So I think we're going to experience it this decade, and it's kind of hard to see that future. But it's kind of hard to imagine, 10, 12 years ago. I also was an app builder before the App Store launched. The App Store launched maybe 9 months from when the iPhone came out. There was an early app store called Cydia. So I used to build apps on the App Store, which was not by Apple. And people are like, wow, it's so inconvenient to build apps. I can't imagine, like, why doesn't Apple make it easy to build apps, with the App Store? And then, the App Store did launch, it became much more easy. And then, Google Play Store launched after for Android. And, it's very hard looking forward to think that, some of the biggest projects and companies in the world are now using apps. And a lot of people, they don't have, a computer, but they only have to spend most of their time on mobile, and it's, it's created a lot of opportunity. And it made communication so easy. Like if each of us were to call each other before on the phone, it used to be like $1 a minute or euro a minute. And now it's, super seamless and easy. Got about 12 minutes left. Yip's point here, Unit team will also present at ETH Denver in Feb 2022. Connect to us if you're there, happy to chat in person too. So absolutely right. We've got a very global and talented, dedicated team, which, has lots of presence in different communities and events. Yip, for instance, who wrote this comment, recently participated in the ETH Lisbon hackathon. Lisbon is also a huge hub, and Denver is also a huge hub. So if there's any way that we can connect or team up with anyone here, please feel free to reach out. Ali, your opinion on HiFi NFT, a hybrid finance blockchain for non-fungible token. Finance blockchain. I've not looked into this project, and I'm not so familiar with this term. So Ali, I'll get back to you. I'll try and do my research on on this specific term. But looking forward to seeing how this plays a role in the token economy and digital asset space. Paula, Hive is a fork of Steam. That is a bit mad. Yep, interesting point. Myra, amazing crowd. Yep. So you mean Bitcoin will be a gateway that piques people's interest to learn more about crypto? Absolutely. So, if you look at people interest in digital assets and cryptocurrencies, this year, compared to last year, it's incredible. Like I caught up with a friend earlier who now is fully focused on NFTs and crypto. And he's only got into it maybe 3 months ago. And he organizes courses as an expert. So it's quite amazing that, a lot of people who just jumped in heads deep this year, like are so passionate about it, they see the potential and the value. What I anticipate though, and what I suspect will probably happen is when the bubble bursts, early next year, middle next year, a lot of these people might, lose interest when the price drops, and then they find other things to do in time for the next bull run. And we saw something very similar in 2017, where, Bitcoin started off the year in 2017 at, under $1,000 or around $1,000. It went up to $6,000, and everyone's like, oh my gosh, this is crazy. It dropped down to $4,000. I was like, oh my gosh, is this the end? And then it started going up to 10,000 to 12,000. to 16 to 18 to 19, and everyone's like, oh my gosh, this is never going to end. It's like Bitcoin can just keep going up. If nobody sells their Bitcoin, it will just keep going up. And then what happened soon after, it dropped down to 6, dropped down to 7, and then for the past 2-3 years, I remember going to meetups and everyone thinking like, oh my gosh, nobody cares about what we're doing, and we would say like, will Bitcoin ever cross 10K, or would we ever cross 19K? And everyone would be like, nah, it's like, hopefully, but that was a crazy time. Are we ever going to get back to it? And then now when Bitcoin drops, to 40 or 50K, everyone's like, oh my gosh, it's the end. So it's very it's very easy to look in hindsight and go, it's obvious that, it peaked at 19, now we're at 40 or 50 or 60. It's normal. But, the way I like to look at it, it's when the token economy succeeds, it's really not going to matter what the price is of Bitcoin or what the price is of any other coin, because, everyone doesn't have to worry about money because there's just so much flowing around of it. It's kind of like, when the internet came out and internet speeds weren't super fast, the difference between your internet speed means that your video loads in 5 minutes versus 2 minutes, right? So it'll be buffering, and it's like, wow, I really want to get fast internet speed because then I won't have to wait to watch a movie. Or if I'm downloading a movie, it's not going to take me 3 hours or 5 hours. It's not going to be instantaneous. And now, whether you have, a really fast fiber optic internet speed or just a pretty average internet speed, most people don't care. So it's very similar to, digital assets and tokens. The price of it won't matter as long as there's a good economic model backing it up, and as long as everyone really thrives and benefits. So that is really the high level. So Yip's point here, we think multi-chain world, and we engage with the different blockchains too, with our World Ethereum Forum, our World Bitcoin Forum, our World Solana Forum. So the World Ethereum Forum is organized by our co-founder, Katya. Our World Bitcoin Forum is organized by our co-founder here on the call, Joe. Our World Solana Forum is organized by Yip. Our World Polygon Forum is here with Anne. It was a huge success. We had actually the co-founder of Polygon. And okay, like Polygon, another really interesting project. So I came across Polygon in 2018 or 19, and it was a scaling solution. It used to be called the Mathematics Network. And it was trading at, say, like a cent or like under a cent. And, their documentation wasn't very good. They hadn't really had much to show. And I bought a bunch of it because I was very interested in the fact that Ethereum had a chance to scale. A lot of the issues that we're facing now, we had back then, 2018, 2019, and Matic had this vision of different ways of scaling the blockchains, and I was extremely bullish on it. But if you look purely on the price or the value of it, to go from 1 cent to like $1.60 to $2 is really difficult to predict. And the valuation of it is also like, to be on the top 50 on CoinMarketCap 2 years ago, you needed to have a $50 million market cap. So if you think about Ethereum was single digit billions, and now it's at 600 billion. So it's quite ridiculous. It's quite hard to anticipate where it can go. So yeah, it's interesting to envision how the future could be, and work collectively hard to get there. So we have about 6 minutes left. Try and get through all the different points. A point here from Christopher: centralization works because it allows for a very focused effort by a startup to put centralized venture capital in a focused way. You describe the pie as getting bigger. The pie does not get bigger. It is more that it is distributed in a different way where more people get a smaller slice of the pie. Can you explain how all these small pieces of the pie can be pulled together to enable bigger projects to be realized? Otherwise, all these small pieces of pie will not work in a highly focused way that is traditional finance. See, this is a really good point. If you look at Uber, Uber went public for $80 billion. That's a big piece of pie. The co-founders of it, Garrett Camp, Travis Kalanick, they made single digit, double digit billions of dollars, right? So that is a big piece of pie, which the co-founders got a pretty significant slice, and the investment funds, whether it's SoftBank, whether it's Sequoia, got a piece of the pie. So when we talk about making the pie bigger, it's saying that instead of it being an $80 billion company or project, it will be a $300 billion project, because it'll do a lot more in revenue, it'll do a lot more in sales. Instead of having 2 million drivers when it went public, it would have 7 million drivers. So that talks about more value created, the pie being bigger. So I understand your point about the pie not getting bigger, but in fact it does actually create more value. And you're totally right about the pie being more distributed. So instead of just the founders and investors getting a slice of the pie, tokens allow for the pie to be cut really nicely. Because if you told your lawyer that, hey, we're going to distribute our ride sharing app to our 2 million drivers, so we're going to have to print out 2 million employee stock options or share contracts, it's like impossible. Your lawyer would not be pleased. So including about tokens, it allows for things like that to happen. Paul, here's a point. I'm planning to launch a blockchain accelerator in Lisbon in February 2022. So please, Paul, looking forward to learn more and seeing how we can support. Highly recommend to create a token for your accelerator so that myself, anyone here on the call can have a piece of your future success with the accelerator, and the community gets a piece of the upside. Paula, do you have some links of the unit platform for us to explore? Yes, most definitely. So you simply need to be invited, unit.network, and various members of our team and community can send you an invitation. Ankur, anyone keen to build the unit network in India? We have a Mumbai token in the roadmap. Ann and I are from Pune and Mumbai. Please feel free to connect. So as Ankur mentioned, we have a bunch of industry tokens and city tokens. These represent the token economies of the various ecosystems. And a lot of people go like, city tokens, it's ridiculous. Like, why would you create a city token or an industry token? And then, there are a few examples of people launching city tokens this year, and all of a sudden people are like, oh my gosh, that makes so much sense. Or, people saying NFTs are completely ridiculous until, you see a lot of money in the NFT space and they're like, oh my gosh, NFTs make so much sense. So, when attention and value and money gets behind things, people start realizing that, they're a lot more interesting. And when there isn't value or money there, then people sometimes overlook it. So the cool thing about things like our Mumbai token, our industry tokens, city tokens is, these ecosystems, our community puts a bunch of value behind them. People get interested because they see a bunch of value, and that allows our token economy to thrive and succeed. Ali, how can the Indonesia community participate? It's crypto gone berserk in Indonesia and scamming is rampant. So, Indonesia is such a big market. I got the opportunity to pitch to the Minister of Investments and Maritime 2 years ago about digital assets and tokens. He's now in charge of COVID here. And he basically manages the money for Indonesia. I said, hey, isn't it cool, to get crypto in, get Indonesia behind crypto? And, the thing about back then, he's 73 years old and he's pretty sharp, he understands business, but it's very hard to see things when they're unpracticed. He needs case studies, he needs examples. The issue with the crypto ecosystem at the moment is there are so few tokens with a real product, a real service being offered, value being created in a sustainable way. So I guess what we're looking forward to in the future is where there's real tokens with real value, and we're confident that Unit can play a big role there. And we have a very big community in Bali. We're building others in different parts of Indonesia. It's the fourth biggest country in the world, 260 million people. It's got lots of economic growth. Same with places like Philippines, Malaysia, India. China has experienced a lot of that growth recently. Myanmar, so Vietnam. Question from Ivy, and I guess we can wrap up soon after this. Please feel free to reach out if you have any other questions or thoughts. I'm at Michael on Telegram, and looking forward to our next master's batch. Maybe final question here. Anyone have good resources on all the different ways scammers can hack into wallets? I see warnings in Discord, like don't click on random URLs. So this is a really big problem. I suppose our unit team can put together some of the ways to prevent getting scammed or hacked. There are a lot of people who make their living simply on scamming or breaking into wallets, and it's it's really terrible because it doesn't create value. And the more education people get or understanding of how blockchains are secured, one simple one is the difference between a decentralized exchange, and a centralized exchange. So things like Binance, Coinbase, here you don't have custody of your crypto. You're basically passing it to them, and they're kind of taking care of it. And then you've got things like Exodus, you've got Trust Wallet, you've got MetaMask, where you actually hold your value. And this is where the future is. But before we get there, we're probably going to go through centralized exchanges, and then that allows us to move towards this future. Adrian's point here: the world doesn't have an abundance scarcity issue; we have a distribution problem, and that's what the internet of value and the token economy will help to resolve. Absolutely spot on, Adrian, and really grateful to be working with you on Unit. And says spot on, Adrian. Yep. Paula also agrees. Paul, there's plenty of room for the VC pie to get bigger because VC is such a tiny asset class. Totally agree. So, when people say tokens are going to replace VC. You know, a lot of people in finance and private equity look at VC and they go, you know, that's irrelevant, small. So it's really interesting because tokens have the opportunity to leapfrog venture capital, and venture capital, you know, has created some amazing projects and financing and funding. I used to work at a fund, and you know, one thing I like to think about is, you know, when the fund I was working at, 800 million euros, we invested in, you know, 7, 10, 15 projects a year, and we would have thousands of people pitch us. You know, so there's a lot of people who have ideas, and they don't need that much money. They just need a small bit of value to realize it and be given the opportunity to thrive and succeed. Yep. So we're 1 minute over now. I really appreciate this, and thank you so much, everyone, for partaking in the master's program, and looking forward to, you know, the tokens that you create in the future and how we can be a part of this collective success and future token economy. Yeah. Thank you so much. Back to you, Anne.
Thanks so much, Michael. That was awesome. We still have a couple more questions, and I think everyone could keep you on longer. Thank you so much, everyone, for being here today. And we have the crypto coaching session that's happening tomorrow, and then the final mentoring session on Thursday with our co-founder, Anthony, who will be talking about the philosophy behind Web 3.0. Please join us there. Ask us more questions about Unit, and we wrap up Masters Cohort 7 on Thursday. All right, have a great week, everyone, and see you tomorrow. Ciao, ciao.